Is that it? Yes, it done. Perfect. Perfect, perfect, perfect. How's everybody doing today? Good. Right, so that's that, which goes there, which clicks on that, which then says we click on here, which takes me to that. Click on share, copy link, do that, get it on there, do that, do that. And then put Alright, hello, how's everybody doing today? Oh, can you guys hear me okay? Oh, we haven't got many in today. That's fair enough. It's too early, is it? It's quite funny. Anyway, happy Monday. Happy new month. Hello, Mr. Reynolds. Hello to everyone else. How's everyone doing? Good, good, good. Alright, good. Get some chat going on. Yeah, that's alright. Audio is fine. Excellent. Happy March. Yeah, you're alright actually. Yeah, good. Very good, thank you. Very good, good. Yes. Let us just post here for everyone's benefit in case they miss it, because people are just not aware that we do these live sessions pretty much every day at 1 o'clock London time, same time, and I guarantee by later or tomorrow somebody will message me and say, when is your live session? It's the same every day pretty much. But yeah, of course. Anyway, how's everyone doing? Anyway, how's things? How's life? Let's get this on there. Let's share that there. There we go. So I think I've put it out there to enough people. Okay, that's working. That's beautiful, beautiful, beautiful. I saw a post on gold. Yeah. Yeah, of course we can. Yes, the diverge. So let's take a look at gold. Yeah, let's have a quick look at that. What we're talking about here is what happened already. The bounce. There's divergence. So that's a 1 hour showing you on a 1 hour chart the divergence. But yeah, it was a good week to take off. It was a nice week. It was sunny. Yeah, sorry. So yeah, divergence. There's the divergence that we're talking about. With the retracement, with divergence, you have the extended price action, which looks to break out of the previous low, the previous structure, which is what it did here. We have this N shape, beautiful N shape. We were just shorting, take the rest of the month off. And then it broke, which was a bonus for anyone who was around for that. I wasn't, doesn't matter anyway. But yeah, pretty decent. So then we've had it drop down here. And then we've had the retracement with divergence from the fib extension levels. Yeah, so that's what we're talking about when we refer to the divergence. The divergence that gave you the pullback to previous structure. So 1760, we touched 1760. So give or take less than a pip. I mean, pretty decent. So if you did manage to catch this move up, which I know some people were trading the Asian session into the London session, and they were getting in, once they saw this pump up, they were getting in at like late 40s, early 50s, even as high as up here to ride it back up. So they took some money. The 1 hour chart does give you a fantastic reversal candle. Look at that candle in the 1 hour. Beautiful 1 hour reversal candle, which was a good enough reason to want to take this back down short off the back of this fantastic movement. So there's the divergence. Then all we deemed to do was to follow the trend with a bit of MT strategy thrown in, and obviously now we have the 764 as well that we're looking for. So the 76.4. Let's do some top-down analysis for gold very, very quickly, so we have an idea pretty much what we're looking at, and then we can explore anything else that you guys want to look at. I mean, pound pairs are currently pulling back, aren't they, off their fantastic run to the upside. I mean, pretty much did what we wanted it to do. Got up to 142.50 almost. It likes that 50 number, pound dollar. So quite happy to see that. Very, very good price action. Yeah, so there we are. So there's 1682 on the monthly that we are looking for to the downside potentially. Let's see if indeed it wants to drop to 1682. We have a 21 EMA down there as well. Certainly done a great little move to the downside. This is a monthly candle, so we have a full month ahead of us. So anything can happen. So yeah, but that's the range, right? That's the bigger picture. When we zoom out, you can see that, can't you? You can see what it looks like. Where's my chart? Oh, yeah, here we go. Let's have a look at this on gold. Okay, yeah, let us move that out of the way a minute. I just want to show you, drill down from the monthly to the weekly. So we didn't quite reach a 127 extension. It was making record highs, wasn't it, on gold, and we didn't quite get there. 21.59. Commendable effort. But yeah, it's really interesting to see. This is the range now that we're in. So we've extended. Some people will call this imbalance because we've basically pumped up in a straight line. We had March. We had the correction, the deep correction when we had the pandemic, and then I basically said, like, with regards to as we roll on a year forward from when the pandemic started. We are now at the point where we're seeing corrections across the board, or we've seen respectful corrections coming off the highs. So everything's made a decent move up, and then there was a lot of profit taking as we headed towards the end of last month. And that I expected to see that. I expected to see some profit taking. I expected to see some highs being made, and then profits being taken from those highs, as it's a year on from when we had all this issue with the pandemic, and seen it reflected in the stock markets with huge volume moves, a lot of volatility, pound pairs, just everything really, gold. So yeah, so that's a 1 month. We're looking potentially for this month to tap down to 1682, maybe even lower, even tap out at 1600, 1560, for example. So there is scope for it to go lower for definite gold. It remains to be seen. That's on a monthly time frame. You can see my volume indicator at the bottom there was showing some red bars. Let's have a quick look at the weekly. So if I take that last where the move initially started to pump from, and that was down at around 1160. If we take that as the low, as our lead first low, the most recent major low, you can see that it hasn't been taken out. It was making higher lows, higher low, Yeah, and then it rallied up. So if we take that, then we could argue that we have now tapped 1725, which is a 38.2. So it's done a corrective pullback. Is that enough, or will we see it drop further and break? If it breaks the 38.2, if it breaks 1700s, for example, then we have scope for 1600s. So we have another 1,000 pip drop. So it's worth keeping an eye out on gold. Gold is just moving really well, and it's it's given some fantastic price action, fantastic movement. Certainly worth putting on your watch list and keeping an eye on it. Just note that you can't trade it with like a 20 pip stop loss, or don't be ridiculous. Use common sense. Trading is, a lot of it is about common sense. For some reason, the most sane people in the world who behave normally every day, they become infatuated and mesmerized and almost hypnotized by the markets and looking at charts and trading, and common sense just seems to go out the window. It forsakes them, and they do the most daft things, and then they look at themselves and think, why did I just do that? Ah, dear. I would say welcome to my world, but maybe that was 10 years ago. But I can relate, because it still happens. It never goes away, but what we're hoping to do is play the probability game, which means that if we can maintain some form of consistency more often than not, we'll be okay. Because you're going to have to accept the fact that you will always have losing trades, losing days, losing weeks, months. It's just going to be one of those. I was going to say it's part of the journey, it's part of the process. And you all know that. Again, that's me just talking with a bit of common sense. Nothing else, really. If you're deluded in thinking that you're going to be like, come in today and by tomorrow you're a millionaire, then I can't really possibly comment on that. I can't even help you. Not right in the head. But yeah, if you can appreciate that it's a process and it's a skill, and it's just like any other skill, it's going to take you time, a long time, 3 years, 4 years, 5 years. Allow it. Don't be too hard on yourself. So appreciate now that we are still trying to punch down. We're still, this daily candle is a little bit of a weird one. But as it's all red, I was just still looking for the downside potential once it made a decent retracement to previous structure, which I highlighted. That's now resistance. So we have really good resistance at that 50% area. And this is the daily chart on gold. And what I've done on this daily chart is I've plotted some fibs using March's activity. So back in March last year, where we had the big sell-off down to around 1450, we had a massive spike down, over 2,000 pips. A lot of volatility to the downside. There were a lot of hedge funds, a lot of big money cashing out their gold positions to balance their books. That was a real big deal, because the stock markets were in free fall and they were losing money. So where were they holding any profit? Well, gold. So they had to liquidate their gold positions. That's why we were seeing these sudden, sharp, aggressive sell-off moves, which everyone thought, hang on, pandemic, gold, safe haven, it should be going up. And on a normal, any given day or longer term, thinking, yes, macroeconomic view, bigger picture, sure, going up. It did. It went up. It did that. So if people thought that it was supposed to go up, so liquidate their positions, a nice corrective pullback from a technical point of view, which presents what? A good buying opportunity. So, sometimes you always have, you have to bear in mind bigger picture, understand the fundamentals. And when we talk about fundamentals, people get confused, and I see a lot of chat going on about fundamentals. It's not about going on your economic calendar, like Forex Factory, looking at their calendar and looking at what news is coming out today, like non-farm payroll on Friday, for example, or things like that. It's more about understanding what's going on in the world. Being plugged in, tuned in to what's going on in the markets, to understand that this was a move that happened because some of the big players that are holding a lot of money in gold, they had to liquidate their gold positions to take the profit to help balance their books, because they were seeping, they were hemorrhaging losses, because we had this massive sell-off, didn't we, on the market? So they had to take the money from somewhere. So that's what happened now. So that's what I mean by fundamentals. Just understanding what's going on. What's going on in the world? Oh, is there a stimulus bill being passed in America? Trillions of dollars. Is that something that you've heard something about? Well, so yeah. So I mean, by all means, you have access to information more than anyone else has ever had in the history of man or woman. So Google it. We have the internet. Go and Google. Read up. It take you literally what? 1 minute? The amount of time you guys spend on social media scrolling aimlessly. It would be more productive of your time if you just, typed in stimulus package and just had a little read, a couple of posts, and understand what that's doing to the markets and how that's affecting the US markets, and because the US is the biggest economy in the world, see how that's going to have a knock-on effect with everything that we do and how we are. Is it going to affect us? More relevant, is it going to affect the trades that we're about to take? Dollar strength, dollar weakness, stuff like that. So that's what I mean by fundamentals. It's not about being an analyst and trying to decipher the numbers, the actual figures that come out, and understand, if it's higher, if it's lower, then expect markets to do this, that, and the other. It's not that at all. Forget trying to make sense of that. That's going to get you nowhere. So yeah, hopefully that helps. But yeah, next downside target then is looking for the 1600. So 1700 is a nice round number. 1689, I said 1682. So maybe down to 1680s to 1700 would make a good area for a drop back down. It's certainly still bearish. Let's look at it from an intraday point of view. Let's see if indeed that move has now finished on gold to the upside, which we pretty much got in at a decent entry, didn't we? Sniping it, started getting in at around 45. I said about 46. It touched 47, so I got 47 and shorted it at 47 as well. I just scaled in with a few positions, and first target was just to retest a previous structure that it needed to test, which was 43.5. There was a level there that just needed hitting on the smaller time frames. So I was using a 5-minute chart and a 15-minute chart. So yeah, this is a 4 hour. This is showing you now that we've done that whole move. We've completed the N shape. We've busted down with divergence. We've wash and rinse move. So it's given it back, retested, but now it's clearly failed. So my first target was always down to about 50% of this move. So pretty decent. Now, is it going to stretch down to the 76.4? Well, let's have a look. Let's drop this time frame 4 hour. And let's have a look on the smaller time frame. Shall we take a look on maybe the 15-minute time frame? Yeah, let's take a look on the 15-minute. Yeah, 15 minutes good. Yeah, let's do it. Let's do it here. 15-minute is good. Let's do it on this one. And I want to pull up the 5-minute as well. So what I've done is we do a lot of talking about fibs being dynamic, not static. So it's not a case of just plotting them one time and then leaving them on your chart to work their magic. They're not, they're not generic. You see on the higher time frames, like this daily, these fibs that I've posted here have been on there for, they've been on there for about, since August when the high was made. So they have been on there, and I have not had to move them one bit, which is great. But on the smaller time frames, you will have to adjust, keep editing and amending. So let's have a look at the 15-minute. What do I mean? Well, so 15-minute, these are fresh fibs that I plotted on there today, because we have this range, really nice almost 200 pip range. That's a nice range to play around in gold, especially if this is what gold is classing as its consolidation, consolidating range. So that 50% was pretty much where we were looking to take it down to, especially when it was sitting quite heavy on the 38.2. So first target was down to about 43.5 to retest the 38.2 area, but then looking for the break to take it down to 1739, which is a 50%, just above 50%, because I always round it up. So 38.7, so we made it 39. That's T1. That was my first T1, and now T2, which it's still weighted to the downside. Where if it can break this range, which it's looking pretty decent right now. If we can break down, we would look for, there it is, it's going, looking for the next fib, 33.7, so I'd say 34, and then ultimately we're looking for 27.5, so about 28, which is a 764. Okay, so there we go, and then I do envisage it potentially going back up to retest the highs, going back up to test like 45. Getting up there by tomorrow maybe, but allow it to finish off the move to the downside. So it's first day of the month, and the trend has remained to the downside. We've had a pump to the upside, so those that took those longs, great with divergence. But now it's allowed you another opportunity to sell it. And look at these reversal candles here. So this 15-minute is where you start seeing candles like this change. Wow, that's some good money right there. Easy money. Easy money. Hopefully you guys are making some money on gold. Don't worry if you've missed it. It's a never-ending buffet. So yeah, 33, and then we're looking for there. And what I did, and what I do when we talk about these fibs being dynamic, look at my 5-minute chart. So excuse me. So yeah, all I've done here is I was looking at the current pullback of this range, and so I had my fibs plotted on that range as well, because I wanted to see, get a measure. Originally wanted to see what sort of a retracement we would get to the upside for a potential entry to short it back down again. So I was looking at that when we had this bounce up here. So I was looking at this and it was struggling, so I got in here at 46, 47, etc. And it was, at the time, it was testing previous structure. It was close to my 38.2 at the time, but now I've adjusted these fibs and I'll adjust them again now. So every time this moves, this is all I do. I want to kind of give myself an edge, or be one step ahead, that if this does find some support and it decides that it wants to reverse and start going long at whatever stage, all I do is keep adjusting my fibs, and I want to keep a track, keep an eye on any potential move back up. So as this range is expanding and getting bigger and it's dropping lower, all I'm doing is I'm moving my fib. So I took it from there originally, and then I put it to there, and then I took it from there, that low, to the next low. It's as simple as that. So always got to adjust the fibs, otherwise they're just sitting there and they're not doing anything. They're redundant. So that's what I do with my smaller time frame. So I can gauge the price action. So I don't try and load it all up on one chart. But it depends your charting package and what you have, and how many charts you can physically see, and how many screens you have, and so yeah, you have to kind of make it fit best for you, see what works. So that's gold in a nutshell. And again, if I show you on the trading view, that's the 4 hour. So again, I could do a split screen on here, but I can't be bothered. Then we'll drill down to a 1 hour. Beautiful reversal, really nice movement. Just nice. That was your money being made today. And then if we just go a little bit lower, start looking at, say, a 15-minute, like I said, you can see that movement. So we've had that pullback. I got in on that pullback just to try and give you guys something. I didn't get too excited about it, because the risk to reward, in terms of a stop loss, if it takes out all of this, then we would look to get up here. So I didn't know how I felt about holding positions if they went up here, because I'd obviously be looking for it to get up, any sort of retracement to short it back down again to capture this move. Thankfully, it gave us pretty much a decent sniper entry, and so now we are going down to, yeah, we're just dropping down. We're going to get down to 28. 30 to 28. Let's see, is it going to get down? It's going, isn't it? But good, very good. Okay, so hopefully that makes sense. Hopefully you guys can get an idea as to how we look at using support and resistance in terms of fibs, and how nice they are, and how accurate they are, and how powerful they are. And hopefully that will give you some clarity, or some, I'll just give you some hindsight, some knowledge, some, nurturing for the first day of the month. Any questions, or do you want to look at anything else? Let's have a look at Bitcoin. So I called Bitcoin down to 42. That went to 43. Touched 43,000 exact. Just couldn't get to 42,000. I wonder if it's got one more in it to get to the downside. Anyway, I think gold's good, because gold daily is doing a really great job at the minute. And yeah, really good price action. Any questions? Do you guys want to look at anything else? We can make this a really short session for the first day of the month. Anything? Any questions? Any questions? All right, okay. No questions. Good. All right. Well, let me know if you're in any trades, and we can explore. No, nothing. Aussie dollar. I suppose dipping your toe in the water on the first day of the month is always it's important, isn't it? Not to get too excited and be too aggressive. Yeah, let's have a look at. Let's have a look at. Yeah, EU and Aussie dollar. Yeah, let's have a look at Aussie dollar and EU. All right, good. Let me just fix this quickly. That's all right. We'll adjust that after. No worries. So let's have a look at Aussie dollar first. Let's pull up Aussie dollar. Let's have a look at Aussie dollar on here as well. Alright, good. Alright, so let's get that on there. Let's get that to there. Oh. Bear with me, guys. Telephone. Hello? I'm afraid not available at the moment, but I can get them to give you a call back. Yes, definitely. Thanks very much. Yeah, anytime's fine. Yes, thank you. Cheers. Sorry about that. The phone call. I thought it was somebody else waiting for a phone call. Let's have a look at this. Let's move away from Bitcoin, and let us get the Aussie dollar up. Here's my Aussie dollar. Oh, there it is. Right. Euro Swiss. Oh, Euro Swiss is such a slow moving pair, isn't it? Such a dead pair to trade. They're not MT4 charts, and if you subscribe to my YouTube channel, you can see there's a video on there about which indicators I use. Yes, someone's yes, you're saying what did you say? Holding gold past your T1. Yeah, got a T1. I'm looking for 28. Looking for 28. I've taken most of my profit off, leaving a little bit on just to run down to 28. If you can get there, great. If not, no worries. Stops a break even. Just leave it to do its thing. It's trying. Yeah, so do you know what? This all just looks a little bit. Why is it looking so? Zoom in a bit. Doesn't it look small? Let's pull this up. This is Aussie dollar. There we go. That's a bit better, isn't it? You can see that a bit clearer. Yeah, lovely drop off 8,000. We said 8,000, didn't we? I mean, it did everything. It did everything in line with pretty much everything else, especially Aussie dollar-related pairs as well. I mean, it was. What is it you're looking for in terms of Aussie dollar? Why am I looking at Aussie dollar? What are you thinking? 76.4 level on the high time frames. Okay. Aussie dollar. Yes, but someone who asked me about the Aussie dollar, what am I looking for? Got 150 pips on gold today. Ah, good for you. That's great. Really happy for you. Alright, so this is the weekly. The weekly on Aussie dollar. A lovely reversal candle. It's an engulfing weekly bearish candle. It's pretty much giving you a clear idea that this is intent on going down, going lower. In terms of how low, well, let's have a look. What is it you guys are thinking that it was going to do? There was divergence. I was looking long, but I'm not sure I should take it. There was divergence. On what time frame was there divergence? Be more specific, please, because otherwise I'm just not clear what you want me to do, what you want me to look at. I mean, what time frame, what entry point, you know, be specific a little bit, and then we can not waste time and we can actually look at that. I can't read your mind otherwise, and I don't know where you've entered or what you know. It's just like, let's take a look at Aussie dollar. Okay, so I've pulled up the Aussie dollar chart. Now what? Where do you want me to go from here? You know, thinking it might give momentum. Okay, but yeah, you might see a bit of a retracement up, but it's a bearish down week to end the month. A very strong push off 8,000. Nice, really, really good, solid price action. You've got to appreciate that this is going to be, yeah, this is going to be something spectacular for downside momentum. So what we could do is on the weekly, pull these fibs back. Let's go here. Let's pull these ones back so they're not in the way, and then let's explore this bigger picture. And let's go like here, full whack, full picture, and downside. Let's also just move those fib levels, the actual numbers, so you can actually see them, so I can see them as well. And then we could say, right, looking for, you know, bigger move back down to 7,000, or yeah, I mean, it remains to be seen. It remains to be seen. I think maybe a couple of down weeks, like another week to the downside, and then maybe, you know, maybe come and test some structure down here, and then maybe pump back up But off the back of last week's weekly candle, big strong bearish candle, I think it's slightly different to a case of simply buying the dips. You know, where we have these little pullbacks here, you buy the dip. You know, little pullbacks, buy the dip. This isn't a pullback. This is a sell-off. So understand the difference. Okay, so you went back down to 0%. Well, I still don't know what 0% is though. You just ah dear. Anyway, yeah, you got to be a bit more specific. You mean the low of the week, the weekly low? Let's have a look. Yeah. So this range, this is an interesting range. Yeah, it might give some of this back. It might give some of it back for sure. It's so bearish. Yeah, I don't know. To be fair, I wouldn't trade this right now. It's in no man's land. It's done a move, so I don't really know what there is to be had from this move. If I take this last low, you know, the last major swing low. So if we zoom out, look at the last low. The last lows are around 7563. 7563, and then we are toying around in this area between the 618 and the 764. I wouldn't go long here. I need it to touch 76.4, which is down at 7668. It needs to touch down here, and then it needs to find some support like this, and then make a move up if indeed it's going to make a bullish move. If, however, we see a bullish move back up, potentially we could see it drop back down and test that 764. The range, generally the move on the Aussie dollar is quite subdued. It's not a massive. Oh, you've posted a chart on Aussie dollar, have you? Where have you've posted a chart on Aussie dollar? Where have you posted this chart on the Aussie dollar? I'm not. Where am I supposed to be looking for that? In my Discord, in my Telegram chat. There's nothing here. I don't. No idea. Yeah, so you've posted a chart on the Aussie dollar, but to where? Okay. Anyway, let's move on. So gold. Look, what we can do here in this. Where? Okay, let's have a look. Aussie dollar. Right. Okay. Oh, there it is. So, when did you post this? You posted this on Saturday. Right, so it's very small, so I can't really make out what's going on there. But the chart is, so you had the charts with the fibs going to the upside. You've done that. Now you need to flip your fibs, don't you? You've got it going up to there, but now you need to put some fresh fibs on. So, for example, like I've just done here, from that low point where its price has taken off from here, that's now your 0%. Your 100%'s at the high. You haven't done that yet, so you've got an old chart which has got some fib levels which are, you know, out of date. That's just showing you the way up. They're plotted so that you can see the direction to the upside, but you haven't got anything plotted to monitor this move down. So like here, I've done it here where I've flipped the fibs to show you to the downside. Yeah, this is what we always talk about, fibs being dynamic, not static. your fibs don't, not showing you anything. They're showing you to move up. Yeah, there may well be, there may well be. Let's get rid of this. What's going on here? Let's get that on there. Let's put that there. Let's get that on there. Let's move this out of the way. Okay, good. So, yeah. But you'll get the message whether it comes through in a minute or 30 seconds. You'll get it. Right. So yes, these. Now we're looking. We are tracking and stalking this sell-off. We want to see this come down, and we want to see it test this low. So your chart is showing just the move up, which now needs to be flipped. So you change the fibs, flip them. Whatever you need to do. Yeah. And then we'd go down to maybe a 15-minute chart or an hour chart, and then we'd want to maybe put some fibs on this range as well. So we can monitor this move up should it decide to bounce up. Is it going to get to here, to 38.2, around 7812? We're going up there. So, yeah, so that's how you use your fibs. You really can't just plot them once and then hope for the best and think that they're valid. Because what about this sell-off? You're not tracking this sell-off, so you have no idea what sort of a retracement it's making to the downside because you haven't put a chart on that. 764. See, I can't see your numbers on that chart because your chart is tiny. Maybe zoom into that area where you actually plotted your fibs and share two charts. Share one chart that had the bigger picture like you've done, and then share another chart which zooms into that area. So like that, for example, just to show us exactly what we're focusing on and what we're looking at. Again, your chart shows me nothing because I can't actually see your numbers and it's all very distant, so I don't know. All I can make out is that it looks to me like you've got your 100% at the top and 0% at the bottom. Hopefully that's been helpful for you for your Aussie dollar. Yeah, we'll see what happens. We've done a nice sell-off. Are we going to have some sort of a retracement up? It's kind of sitting. It's almost touched the 76.4. Toying in that area, in this zone. Could we go up from here? Certainly can. We will see. Let's move on to the euro dollar. Right. Okay. Euro dollar. Let's start on the higher time frame. Monthly. Ooh, that's a mess. Okay, euro dollar still bearish. We've had a couple of days to the downside, a couple of months to the downside, still bearish. Let's have a look. Bit messy though, isn't it? It's a bit messy. You can see I've got fibs plotted up, down here. When I see myself plotting fibs like this multiple times up and down, there's a lot of information here, a lot of fibs being plotted first to the downside, then to the upside. Then it tells me that there's price action's choppy. It's very range bound. It's not something that I'm clear on in terms of wanting to trade. Good for an intraday move. Good for a quick scalp. Let us quickly just do away with this. Let's put this back on a 4 hour, and let's put this one on a 1 hour. And then Actually, I need to update these levels here. Funny enough, 7.4. Yeah. Okay. Just going to do some analysis on the. Might go to previous resistance, previous structure, which is 7,400. Yes, Aussie dollar could well do that. Could well do that. It's always really good, important to look at the bigger picture. I've just seen that on my daily as well. Really good to note. If it starts to make a decent move to the downside, to understand where price can go to. Never be dismissive, because that was the last range, wasn't it? The last pullback. Major pullback. We've had another one here, a smaller pullback, so we could. This is why I've just pulled those current fibs back. I'm going to plot some more fibs here. Let me just put it on here quickly. This is my Aussie dollar. Just before I just want to update this chart before then we move on to euro dollar. So what I'm doing here is just put my fib extensions on. Just want to see what sort of fib, what price action we had. Okay, see, that makes more sense, doesn't it? So we went up, we extended beautifully. Tapped out. There's a massive daily trend line running up where it's tapped the underside of that as well. 8,000 fib extension, couple of confluences, bosh, back down to 7,820 would have been first target. Massive divergence down here on the daily. Again, I haven't really looked at my charts because last week I was off, so I haven't really made any effort. I did have a quick glance over, and I did see that everything was moving together, so dollar related moves, etc. And everything, like here for example, the Aussie dollar, it technically speaking, it bounced perfectly off a key area, 8,000, massive, 8,000. And you generally don't see big moves on the Aussie dollar. The fact that we've had a massive move like this, best part of 300 pips in 2 days, that's pretty decent. Pretty special. So yeah, that's not bad at all. It's about 150 pips a day. That's a proper sell-off. So that's telling me that there may well be a bit of a relief bounce. It may well go back up and tap 7,820 or somewhere like that as a pullback. But potentially we've got further downsides. Potentially, because based on that strong push to the downside. So have to wait for if you're not in on this, wait for a retracement. Would I buy this back up though? Not yet. No, it's not giving me any real indication that it wants to go back up. So hopefully you find that's helpful. Let's quickly just fix. I need to redo my fibs here and just redo everything on the Aussie dollar on this chart on a 4-hour. Very quickly. And then we'll go and have a look at the euro dollar, and then we'll probably just finish there because we'll keep it nice and light and easy today. So what I do here is I take my fibs, because we've punched higher, we broke out, we made a new high. I take these fibs and I just drag it across and just replot them. That's what we have to do sometimes, right? Especially on the smaller time frames. This is a 4-hour chart, so I haven't updated it since last week, or possibly even a week before, because I haven't traded the Aussie dollar. So yeah, come in, look, just edit, amend, adjust, that's it. Every now and then make slight updates, and that's it, done. So that's taking it from that last major swing high at around 7,000. So 7,000 to 8,000, pretty decent, logical, common sense type move, isn't it? Almost on the Aussie dollar, 1,000 pips. About 1,000 pips, decent, very nice, solid. Let's look at this previous structure here. Let's look at this this zone. I'm just going to drag this across as well. Might have to. There we go. Just pull it across there. Done. Just keep that. Yeah, that'll do. Let's see what sort of zone we get down to here. We could see 7,620 area, and then, like we say, 7,400s, even lower. I mean, there's so much scope here. Just keep an eye on that. Keep an eye on it. First day of the month. There's no rush. Don't go rushing in yet. Let it do its stuff. Let's explore this last swing high and last swing low. So we had this liquidity grab to the downside, pull back, then it rallied. So let's explore that pullback and rally. Let's explore that range. And this is what I'll do on a 1 hour chart. And this will give you, should give us a 764 and a 61.8. Pretty much that area which I highlighted on the trading view. I'm just showing you how I plot the fibs. So hopefully you're finding that this is helpful. So there you go. And then you add your other confluences, whether you're trading, I don't know, order blocks or whatever it may be, just to provide you some further structure. Good, so that's that. And then what we could do is drill down further to like a 15-minute chart and just, you know, plot the fibs on this range. But you know, I'm not going to bother now because I've done it all on the other side and I showed you already. So let's move on to the euro dollar. Before I do that, let's click on File. Let's click on Save. So I've plotted fibs. I've done it all fresh, all new. So we want to save my information so that if whatever happens, it's always there. Let's have a look at euro dollar now. Zoom in. I need to fix that on a 15-minute. That needs sorting out. Okay, gold. Gold looks like, are we going to get back up to 45 on gold? Or are we going to have another stab to the downside? At least 45. Right. Euro dollar. Have a look at euro dollar. What are your thoughts on euro dollar? So it may be a double bottom, and it's now at the 161 fib extension, which is around 120.28. Okay, I'm reading that. Maybe some longs back up to 100%, which is 121.10 for euro dollar. Okay, let's have a look at euro dollar. Yeah, bearish price action. We've seen some nice corrective pullbacks on pound pairs as well. Maybe for another move back up. So let's start on the daily, and let's have a look at it on here as well. Daily. Let's drill down because this is quite messy. Okay, so that one is done because that pretty much tapped out of the 764. Let's get rid of this one. Remove that. Double bottom. I see what you mean about double bottom. So I was actively monitoring euro dollar because a lot of people were trading euro dollar over the last few weeks. So I was giving a lot of analysis on that. I didn't take any trades on it myself. I don't think. No, I didn't. No. But it was moving in line with dollar-related pairs, so I was looking at that, looking at the Dixie as well. And it was just nice to see. Price action's been fantastic. Wouldn't you agree? It has been actually pretty decent to trade. Trading conditions over the last 2 months, the first 2 months of this year, have been fantastic. I mean, if you just sit patiently, wait for some setups, and have a go, like I've been doing, it's pretty much giving some. Yeah, it's just giving money. It's just giving pips, and it's just been, you know, percentage-wise, 0.5% here, 1% there. It's not been too hard to make money. The only way you'd lose money is if you overtrade. And it's really hard not to overtrade because when you're making money, knowing when to stop is a very, very difficult. It's just a very difficult thing to do, isn't it? So. Yeah, so let's pull this across. That's what I was trying to say. You know, if you're taking an FTMO challenge, you need to have a plan for that challenge. It's a different way of trading. It's not conventional. You know, they want you to hit 10% in a month, and if I make 10% in a month, I'd be delighted. But the fact that they're forcing you to do it, it makes you overtrade and it forces you sometimes. So, but what I was trying to say is, well, if you get into the habit of making sort of 0.5% to 1% a day, risk 0.5% a day, make 1% a day. You know, if you've had a phenomenal day where you've made 3 or 4%, again, just need to then slam on the brakes and just be calm and just say, okay, let's cherry pick the next setup. So I'm in a controlling position, and I've got plenty of time to get it over the line. Now, if by the end of the week, end of the third week, going into your last week, the fourth week, you're stalling and you're struggling to get it over the line, you're at 6 or 7%, then maybe you can risk 3 or 4% of that 6%, or risk 6%, to get it over the line. So your worst case, you're going to come back with a free another go, aren't you? So it's about having a strategy. It's about having some structure and planning what you want to do and how you want to do it, and have a contingency plan to say, right, if I don't do this, what have I got to do? But have a plan. If you go in blind, you just go in and hope to wing it, then yeah, you've got nothing to fall back on. If you respect yourself that much, give yourself a chance. I mean, Jesus. You are, at the end of the day, you are your biggest supporter. You are your own biggest fan. So, act like it. So, where are we at? 122.55. Didn't quite get there, but we had this massive wick rejection. Almost touched that 764. It would have been a good entry to the downside to get in on that range. This is daily chart. Massive sell-off, massive rejection. They've all pretty much done the same thing, haven't they? All these euro pairs, all these dollar-related pairs, big drops. Euro dollar, to be fair, is holding its own. It's range bound. That doesn't give me anything really. I'm not excited about this at all. Let's be honest. Common sense. What's it doing? It's sideways. We went down, okay, and then we went up sideways. We went up again sideways. If anything, I want this to finish off the move to the downside, hit 119.50 area, maybe even get a little bit lower to 11900. And then decide what it wants to do, because it's rejected that 76.4 to the upside. Obviously, if it takes out this 76.4, then we're bullish again. So if it goes above 122.55, you draw a line in the sand. That's why I always use this 76.4 as my marker, if you like. Above it, bullish. Below it, bearish. Simple as that. And so this is all range-bound activity where you can buy and sell and do as you please, but be mindful of the fact that you've got your low here, you've got your high there. If it breaches here, we're bearish and we're going down. If it breaches here, we're bullish, we're going up. If we're below this area, we could be looking at, every time it pops its head up like this, short it. Oh, right, my charts are done. Yeah, good. Okay, leave it there. Hopefully you've gained a few nuggets of information. If you need anything, please ask me. It's a new month. You can message me directly on Telegram at ALX_TYW. Share any charts. Join my Telegram groups. There's a Discord you can join as well. Just whatever. It's all freely available to you. So make the most of it. Have a great day, and have a great week if I don't see you. But hopefully we'll do this again tomorrow, and we'll try and keep it to like an hour max. We'll take it from there. Alright guys, take care. All the best. Bye.